I mean, oil prices were like pretty low, right? And then we have this war. And
Mhm.
the US guys, right? They're like, dude, oil prices are too low. Like we're not covering our cost to operate, right? Which was kind of an issue for the US oil industry. And now all of a sudden, like things have jumped.
Primary, secondary, third, tertiary orders of effects from that one thing. And so I try to do that and just see how I can kind of parallel that to real estate. But yeah, so that's kind of how I absorb it. But anyway, so lately the big conversation's been around the Iran war. Like this is tax time. And so I'm getting all my K1s organized from all our partnerships. I mean, I'm talking about like 15 to 20 K1s, right? It's ridiculous.
Yeah, I think is great. So the war chest is where I send money, receive money on a personal, like not a business LLC. It's like my personal account. So like contributions of capital, short-term loans, like everything just comes back to there.
Oh, the biggest thing we found time and time again is lead to lease time, right? Like the process is just like how fast you can get back to that lead, and that has created the highest conversions.
To weekly headlines and Project Pearls. In headlines, we unpack this week's biggest stories and share how they're shaping our own personal wealth building decisions in real time.
Then in Project Pearls, we'll pull back the curtain on our real estate deals and share the wins, the challenges, and the learning opportunities.
We have a great headlines and Project Pearls for you today. With me is the Sultan of Smart Money, Dr. Reed Faldet. Reed, what's new with the family, buddy?
What's new with the family? What's new with the family? We got Easter this weekend, right? So
Oh,
we'll go
yeah.
to my in-laws and celebrate with the rest of the family. There'll be about 9 kids under 5. So it'll just be like straight chaos and dirty diapers everywhere. And then someone will be inevitably be sick when we get home. But that's that stage of life. That's fun.
Part of the
But
joy.
but
Uh,
yeah, and then also we're getting excited. We have a couple weeks. My wife and I are going with her sister and brother-in-law to the Bahamas, and I've never been. So just doing kind of a chill, just couples vacation without kids. We haven't done that for a little while, so looking forward to that too. Just get some sun and have some fun.
who's watching the kids?
The a combination of grandparents and the nanny. So
Nice.
yeah, we got a deep bench of babysitters. We just realize like you need it, so we just keep adding.
That's
Yeah.
awesome, man.
What do you got going on?
We're going to, my sister moved to Missoula, Montana last year. Her husband's parents live there. They're awesome. So we're gonna drive over there. They just built a new house, so it'll be good. Go to church, Easter egg hunt,
Yeah.
hang out at the my sister's parents-in-law's place. They got kind of like a little homesteaded farm thing out there, which is awesome. Like the
Cool.
four-wheeler, and the
Yep.
elk in the yard, like all that stuff. So that'll be good. And they cook it up too. So anytime
Oh,
you go over there, you get like a massive meal, right?
you're
You're
well
getting
fed.
fed.
You're well
Yeah,
fed.
you're well fed. And my girls get to see their cousins. They've got a couple cousins about their age, and so they're close. And so yeah, it'll be a good little oh,
You're
and
gonna
my
need.
sister just finished a house, so she built a house, and so I'm excited for her. You know how that goes. It's
Mhm.
yeah.
It's always fun.
So
It's always fun to see the brand new home and they walk you through it and their thoughts behind it. It's exciting for them and exciting to see it too. And then
yeah,
you're gonna need like a 72-hour fast after your Easter holiday then to get back on track.
something. A lot of steps.
A
Do
lot
do
of
a lot
steps.
up to 10,000, 20,000 steps for a week. So it'll be good.
Yeah.
Okay, headlines and Project Pearls. So headlines. What's in the news this week, Reed? Or
I
in
mean, I
left?
don't. Yeah, do you check in? How often do you watch the news, or like what's your source of information? I'm just curious. Where do you get it from?
Yeah, so I really like the data I'm getting from X. I really
Yep.
like that information. The challenge is that once it kind of knows you, it just sends you stuff you want to read. And so I
Sure.
also have to check some of the other news sources just to figure out kind of what's going on
Little gut check.
overall.
Yeah.
How about you?
Yeah. So I mean I every morning I probably shouldn't do this, but like I just have like a few YouTube channels that I like will just quick get some reels on, get some. And there's certain ones that do like market updates. So from like the public markets to what's happening geopolitically, and it just I don't spend that much time on it. Just kind of get a pulse of where things are, and I find it interesting, even though it's not like super productive always. But I've been watching. I like to watch some of the traders on the stock exchange, like how they view actually commodities traders, equities traders, and just hear their perspective because they look at the geopolitical scene and then they try to drive like primary, secondary, third, tertiary orders of effects from that one thing. And so I try to do that and just see how I can kind of parallel that to real estate. But yeah, so that's kind of how I absorb it. But anyway, so lately the big conversation's been around the Iran war. So, right, the closing of the Hormuz Strait and the limited oil supply going through there, crude oil and liquid gas. I think it's something like 20 million barrels a day usually pass through there. So which equates to 20% of the global supply. And so I think if anyone's been watching, like you see crude oil prices have skyrocketed. I don't know where they peaked. I think maybe it was 120 some a barrel. Are you muted right now, Josh?
I
There you
was, yeah.
go. Were you saying something?
No, not to you.
Oh, okay.
Make sure my wife knew that we were recording a show.
Okay, okay. Yeah, so basically we've seen crude prices kind of skyrocket, and it all goes based off of like what President Trump says about when the war is wrapping up versus how long we're going to be there, and so people are trying to price in that effect. But if we just assume that this war or that the strait is going to be closed longer, we can kind of assume that oil prices are going to stay higher longer, which means energy prices are going to stay higher longer. And so just trying to figure out how is that going to flow into everything else, right? And the big thing is people worry about is like, well, if if energy prices stay high, that's going to lead to inflation because all prices are gonna go up and stay up. And if the Fed before was planning to maybe cut rates or we've been forecasting that they're going to cut rates. Now it looks like they may not or may even raise rates if that energy shock causes mass inflation across the market, right? So now we're starting to look at okay, what's the likelihood of an interest rate hike now rather than a cut as we were planning on. Now we know that the the administration, right? President Trump really wants to lower rates, but it seems like the Fed will be hard pressed to do that if energy prices stay high. So what does that mean? I mean, as we've talked about in prior shows, right, is like the cost to borrow influences so many things in our economy, right? We have a credit economy, so may slow down a lot of things, may make it harder to refinance debt, may make it harder to buy a home or whatever you need debt for. So I just saw this, so I refinanced some of my student loans because I was kind of looking at this and I was like, okay, the treasury rates have come down, like I should probably refinance now because if this thesis plays out, the treasury is going to go up, right? Maybe the Fed raises rates or whatever, and then I'm gonna be stuck refining at a higher rate than I want to. And I literally, so I refinanced my student loans, and it wasn't a whole lot, but I just wanted to get it done. And then I was gonna refinance my wife, so I sent her like, hey, get this going, right? Within 2 weeks. Like she was a little slow, so I took it over and did it. It was like a 0.3% rate hike on that, which that's significant in such a short period of time. So that's how I kind of look at the global and then look at like how do I need to plan around it. As simple as something as refinancing student loans. Also, we completed a home reno, right, on a private note, and like we're in that place where we need to get a new appraisal done, right, and then we get to basically lock in our late rate when we want based on when that construction loan runs out. And so I'm like, I need to push to get that appraisal done so that I can kind of wait and then lock in that rate at the right time. So, but I also look at this from our investment standpoint too. If we're refinancing a property, so everything comes back to rates on the personal side as well as on the investment side.
Yeah, no, I mean it's tough to predict this stuff. I mean, oil prices were like pretty low, right? And then we have this war. And
Mhm.
the US guys, right? They're like, dude, we're oil prices are too low. Like we're not covering our cost to operate, right? Which was kind of an issue for the US oil industry. And now all of a sudden, like things have jumped and Yeah, it's interesting. And I also think like, we've been going green so hard that we've like cut off our
Domestic
energy.
production.
Yeah, not just here, but other countries like Northern Europe, especially, right? Europe. I mean, so it really affects folks. And we've already had massive inflation in energy the last 3 years.
Hmm.
I've replayed some of those numbers on here, but it's massive. Like I forget, like 20% a year or something on average
Yeah.
for energy costs. So it's like our energy costs already have skyrocketed the last 3 or 4 years. And so this is becoming more and more not a cheap resource like 50 years ago when the dams were built, right? And then like electricity was kind of like an afterthought on the monthly costs. It's becoming more and more significant, and then there's much more pull with all the compute resources are going to continue to increase, going from oil to, gas-based vehicles to electric vehicles, robots. I mean, it's just going to continue the demand to increase. So, um, I think we just need to have a better plan around, all of us need to have a better plan, both individually and city and state around energy, because it's going to be more and more significant.
So I was looking
Yeah.
just to track this, what you said. So, when I'm going through my investment thesis, I still invest in equities and everything, and I just like to check indexes. And so, VDE is Vanguard Energy Index Fund ETF. And so, more broad energy sector, I could tell you everything that's in it. But basically, within the last 6 months, has went up 33.8% in this index fund. That's a lot of movement in 6 months. So, I was looking at it as like, oh, should I be more invested in the energy sector? It's done well, but this is the thing about timing with these kind of things. It's like I'm already behind, right? So every now and then I check these indices to kind of see where things are. And yeah, you have to be ahead of the curve on these trades. But then you look
Yeah.
back and you look
Yeah.
back at years past and it's traded flat for so long, right? So then it kind of
Yeah.
you're like, same with gold. How long did it trade flat before it took off? Which is another story. Have you seen gold prices, silver prices plummet? Have you seen that lately? So
I
I don't
have.
own I don't own
Yeah.
gold, so I don't
Right.
pay that much attention. But it's more an indicator, they say, of liquidity issues, right? Amongst many of these
Yeah.
countries that they're getting pinched on oil prices that they can't borrow, so they need to liquidate a lot of their assets, which sometimes are the precious metals. So yeah, it's hard. It's hard. Your head spins every morning you wake up if you try to look at all this stuff. So sometimes
And
it's nice to just have a clean business, focus on the thing in front of you, and grind every day. But
that's how I look at it too. It's like I like to hear this stuff, but yeah, if I spend too much energy on this stuff, I'm like, wait, I need to get done. I'm supposed to get done. And I agree. I mean, gold, you're like, oh, okay. When things are rough, like usually people flee to gold. Well, with a war, things are rougher, and it's the opposite, right? So it's really hard to predict those things. And so unless you know something so deeply that you can, like you said, have a good sense of the primary, secondary, and tertiary like effects, then it's like you're just wasting your energy. And I would think I would almost, if I ever like I hear about these things like where people are like, oh yeah, I invested in data centers or I invested in energy, right? Like I'm more of a general, I'm in real estate, but if I were to be more in stocks again, I would be just in index funds, right? Because I would have to test my thesis for like 2 years, right?
yeah,
I'd have to follow the information, gold, energy, all these things, right? Make bets and see how my bets turned out. And after 2 years of lots of trades, lots of data, right? If I actually did well, then I'd be like, oh, look at this. Okay. I've read up, I'm doing well. Now let's use real capital, right? But otherwise, I just think the evidence, the research out there says you're going to lose money doing that. And so I wouldn't do it with real money the first time. I would have one of those fake portfolios like my kids use at school, right? And just see how I did over a 2 year run. Um,
yeah, I'm with you. I try to. People will say this, right? Like I trade and I made these big bets and these have worked, but you have to make such big bets to make any. So if a stock runs up, let's say even 100% in a year, right? Which is phenomenal. There's no saying that you're gonna continue that run up, right? It's just gonna be some freak thing you bought at the right time, you sold at the right time, whatever. But how do you repeat that year after year? And also you have to put so much money into that one stock. You have to be so convicted, right? But you're so far out on the risk curve then at that point too that you can go to zero. So something like historically 90% of stocks have went to zero, right? That's just how it works. Businesses come, businesses go out, new businesses come in, right? And so that's that ebb and flow. So you can't really be long any specific business forever. It just doesn't work.
So, yeah, and you have to know, right? Like, I don't invest in businesses outside of dentistry and real estate because I don't know other industries, right? I have to put so much time and energy in. And like you said, there's return on your investment, then there's return on time. And so, if I only have enough time to really understand two things, right, then gosh, I better be investing in those things. And then I'm comfortable making bigger bets. And then my return on time makes sense, right? Like
100%.
if something doesn't have six zeros after it, like I try not to put any energy into it because it's just the opportunity cost of your time. And I know when I diffuse my time, I'm going to revert to the mean.
That's a well said. I feel like that's a very good statement. It's true. And it's just I think sometimes it's interesting and it's information porn or whatever you want to say. It's just like your brain likes it because it sounds interesting and intriguing and like makes you tricks you into thinking that you're probably more competent than what you are just because you've consumed a lot of information. But it's just not enough information and skill to act on in a meaningful way that's going to produce a good outcome for you or a meaningful outcome for that matter. Like you said, you'll just revert back to the mean.
And
So why
most of
waste
the
your time?
time, yeah, and most of the time, I mean, dentistry's definitely on, things are more and more challenging every year in dentistry, right? I mean, we're definitely on that track versus the things are getting better and better, I feel like, as far as financials due to the economic pressures. But at the end of the day, if I'm focusing on macro, yeah, that's a lot of time and energy out there that doesn't directly produce results locally for me. And then two, like, whatever industry I choose to play in, if I commit my energy and time to getting better, right? Like there's usually value in that industry. Like that industry's there for a reason, right? The society values it. So what I'm really trying to do is just get better than a lot of the other folks in that industry, right?
Sure. Mhm.
Because if you're better than the other folks, you're gonna do well, right? And so you got to watch out. I mean, every once in a while, certain industries like, VHS rental shops, right, are gonna get obliterated. Like you're done, you're obsolete, right? So you got to watch out for obsolescence risk. But as long as you're watching out for obsolescence risk,
Obsolescence.
obsolescence, thank you. Then then I think you're good, right?
Yeah.
So I just hunker down on real estate, and we can talk about that on our Project Pearls here. I mean, that was one of my
Yep.
main pieces we'll kind of get to. So,
Yep.
anything else on new news stuff that's out there that you're reading, that you're seeing? I got one.
Yeah, you go for it. I mean, there's a lot of things you could talk about, but I think that was the big one. So you go for it.
Okay, so one of the big ones here, since about a third of my projects have been like community involvement with like the city, the state, funding from those applications on programs, et cetera, a lot of compliance stuff. Um, from the federal level, they're really trying to cut compliance stuff, like less free up banking, free up construction. I mean, that's what they're trying to do. But on the state level, it's been the opposite, right? It's still, I live in Washington State, so it's still been about like adding laws, adding structure, more taxes, more government, like deciding as opposed to the people deciding, right? It's kind of the opposite to federal. And one interesting thing that happened this month is, as we're, building townhomes that are income restricted, right? So instead of say average income around here is 100 grand, and instead of being able to sell these townhomes to anybody, we got to sell them to people who are making around 80 grand, or the family is, okay? And the city supports that affordable workforce housing.
Mhm.
And one of the ways to do that is you get like down payment assistance from the state, and they have a bunch of programs they've created, but like there's like one big one. And when you read about the program, it's really interesting. It's like, if you are white or Asian, you cannot apply for this,
Oh,
right?
jeez.
And so, you laugh, but like affirmative action, like all these things, right? You're really identifying like race or genders that are unequally represented in the results, right? In the outcomes. And so you're like, hey, how can I like help these populations, these genders, like really have more of an equal bearing in this industry or whatever, right? And so, Washington State does home. So I'm not getting political. I'm just kind of talking like actual facts and how to react to them. So like you're seeing that like home ownership has been a challenge for like, non-whites, non-Asians, right? And so you create a program to like help out with that, right? Um, but then it's always the counter argument. Well, what about like merit based? Like, well, these people are working hard and they need it and they're white or Asian. Like, is it really fair to anyway, so Washington State's kind of taking the stance of like we're going to represent like historically prejudiced populations or whatever and support them, right? Well, the feds who fund a lot of this stuff and HUD, so they're suing Washington State. They're suing this program now because of
Oh.
that identification of specific populations.
Mhm.
So for me, this is significant because this is one of the funding sources. Like we're looking, like who do we sell these townhomes to, right? And we still got time, so it's not like a thing, but it's like it actually like affects me. And then what I want to share with everyone who's listening is just like depending on what your state's, goals are, the plans are, and the federal, like you gotta keep an eye on that stuff so you can kind of see where things are going, right?
Sure.
And so yeah, I thought that was an interesting one. Um, yeah.
Yeah.
Okay, Project Pearls, you want to dive in?
Yeah, I think the segue when we were talking about just like you said, and I were talking about like you got to go deep on something, right? Something you believe in and understand. And the further I go into even a specific asset class like multifamily, the more you realize there's a lot of nuance to it and strategy and right there's you start to see the red flags and the risk points. So, for example, I had my string of asset management calls today. We have a little over 500 units in Kansas City, and so we kind of crank through those properties. And most are doing well, but we also look ahead at like being proactive. So one of the big things is like if you do a heavy lease up and you had some kind of rent incentive or concessions that you're giving
Yep.
to lease
Yep.
up the property. So that might mean you'll do 6 months leases instead of one year, right? That might be kind of a concession. It's not ideal. You might do first month's rent off or whatever. So we did a lease up on a property because we had a flood. We lost a bunch of units, and then we kind of gave these
Yep.
concessions to refill it as fast as,
Yep.
fast as we could. So it's a strategy used, just like discount pricing, whatever. Um,
Yep.
and what you look at is like, okay, now you have a cohort of tenants that in 6 months' time could vacate, right? And
Yep.
so you're looking at that because you're gonna maybe give them discounted rent for those 6 months, tell them they're gonna pop up to market rate rent in 6 months' time. But now you may have one of two things happen, right? You may have a good amount of them retaining and bump up to that market rate rent, and you may have a good amount that leave, right? And now you have unit turn costs. And so how do you mitigate that risk? How do you go through that? Well, there's really this tight renewal process, focusing on sales, focusing on going on to each of those tenants. You can send them a renewal. You can talk about what they like about the property, if they need anything fixed, like really just do that customer service side of it to see if you can get them to stay. But the key thing is being in communication with them on the front end. Now, it's very hard to build systems around this because one is you can say, you can tell a property manager, here are your metrics. You have to talk to each of these people 3 times, blah, 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 blah. It's another time thing to talk about like quality of like sales. Like how do you communicate with the tenant? How do you get them to sign that renewal? How do you get basically ahead of this problem as soon as possible? And so that's just like a nuanced thing on one small part of multifamily investing. So th those are the things we kind of talk about on an ongoing basis. Any questions on that? I can jump to the next thing. Your thoughts?
Well, I've got a lease up coming in a few months. We're going to use Buildium for our software. We're
Okay.
a little too small for cat. What's the big one? I can't remember. There's a big one that a lot of people use. We're a little too small because we're starting out, but Buildium is quite good. So we're going to use that one. Um, this is a smaller one, this one, so it's only 30 units. So, absorption rates in my area, let's say at worst are 10 units a month, better maybe 13, right? Plus you're going to get the pre-lease, a certain percentage, right? Maybe 5 to 10 units. So, we're probably only looking at like a 2 to 3 month lease up on this one. One of the questions I have for you is like advertising. How helpful have you found it to advertise those first couple months, like when you're trying to do, like you said, like a flood, you're trying to release, like are you spending money on like Google ads, Facebook ads, in addition to Zillow and apartments.com just being on there and Google Maps?
Yeah, I think Zillow and apartments.com are like the big ones. The most of the leads filter through there. We found good luck with Facebook, but at the same time we're C class, B minus, right? So that's a different demographic of people that you're targeting probably with your class A multifamily. So might be a little
Yeah,
bit different, but vast majority of leads come through there. And I think we've experimented with some other ones too, that are more like ground-based marketing stuff that the property manager can do. We're really just trying to incentivize the on-site manager to just like get it done, right? Like you give them some of the marketing infrastructure at the back end, but man, if they got to go out to the community, put flyers up, talk to people, right? Anything to get people to showings and then ultimately get them to sign. So yeah, I don't have, I think it's just market specific, but we use kind of the big platforms
yeah,
already.
makes sense.
Yeah.
Yep.
Oh, the biggest thing we found time and time again is lead to lease time, right? Like the process is just like how fast you can get back to that lead, and that has created the highest conversions. So
Yeah.
if you take a day to get back to that lead, like you're going to be in trouble. So we have automated, I don't know what the name of the software is that we've plugged in that is AI related that gets back to every tenant as soon as every lead as soon as possible so we can really cut down that time frame and get higher conversion. So that's what we've noted too. I mean, this is true of every business. You just got to layer it on to multifamily. Trying to think of the other side of that. Yeah. The other thing I was going to say is feedback loops. You need fast feedback loops to know if something is working or not working. So, for example, if you're going to implement a lease up process over 2 to 3 months, you need like weekly, almost daily feedback loops to make sure that your marketing is working, that your lead to showings metrics are where they should be, that people are showing up, that the conversion after showing is high enough. So it's just a funnel, but the shorter your feedback loops, the more you can iterate and the more you can improve on your process and then ultimately get a better outcome. And this is the same as dental offices too, but just that's my kind of advice
Yeah,
around it.
and that's how I set up things now too. I mean, my most successful things, I usually have a who in charge of everything, right? And we
Yep.
kind of align and they're good and they're proactive. And then as they have questions, they just text me, call me, and we just solve it and then keep going, right? We don't have like, we have a meeting in a week, so we'll just talk in a week, right? It's like, if you need something, just text, call, we'll just knock it out.
Yep.
That's a much better, not that we don't have the weekly meetings to keep things like you have your asset management meetings, right? Like once a month, right? You have those meetings to set the cadence and whatnot. But if there's a problem that comes up 2 days after your asset management meeting, like call or text me. Let's just knock it out. Let's not wait a month until it got bigger or hasn't been solved, right? So, but
That's the
that I think
speed.
yeah, the
The
speed. But
speed
I
to
think
solution. Speed to solution is very important.
speed dissolution, yeah. Yep. And it's
That's
funny. These little things are all nuances, right? I mean, you read books, business books, and you hear one thing or another, but eventually you just kind of experience things and you just choose a path that you think and feels right based off of all those experiences you've had.
yeah.
Um,
Yeah, there's no business books that can prepare you for it. You just do it and you just get really good at problem solving. Like that's it. Like I am we were just in an asset management call and yeah, like I'll go talk to our property manager and we'll come up with a plan for this and blah blah blah. And I said, "Oh no, no, we don't need a plan from now until next week. We need action from now until next week." So tell me like what is going to get done from now until our next meeting. And like I sound a little intense, right? But at the same time, I just can't
Oh,
help it. I just like I don't want to be at the same point next week because the speed to solution is so important that we're going to lose a week if we don't. So I need something
dude.
taken now. Yeah.
Um, this guy, yesterday I had a meeting with a developer. He's looking to bring on local, somebody for like a 119 unit in the university district. It'd be a cool like student housing project, like super
Oh,
fun. And so he flew over and we had lunch yesterday. And he's like, hey, like we'd be doing the construction too. And he's like, hey, I've had projects in the past where like I just fell out of the loop, like people weren't communicating with me, and like I'd be like, and I was like, dude, you're preaching to the choir here. Like, like this is why I have my own construction company, because like that happened to me too. Like these, the
yeah.
architect, the engineer, and the contractor were just like blaming each other in a triangle, and I'm just like, this is not productive. So like I'm the same way. It's like once I find like a good partner, I told him like, look, like I don't like micromanage, right? We have our regular cadence stuff. I don't micromanage, but I need to be CC'd on everything. Like there's a nuance, right? Like I don't want to be in the middle between people. Right? I just want to be CC'd so I'm in the loop, right?
Yes.
So and then if you want to be involved in all the conversations, we'll just CC you on everything, right? And then if you want to chime in, you chime in. And so it was so nice to hear like someone else that had shared pain points that I have, right? And I just said, look, like, yeah, like this is also the things that bother me. This is how we deal with it. And he just like absolutely loved that because he knew the pain, right? And you know the pain, and I know the pain, and yeah. So I guess what I'm saying is these concepts that Reed and I are talking about, as you're listening, listeners, like these aren't esoteric. These are like things we use in our daily lives that have allowed us to like separate ourselves from the flock, the pack, right? So utilize these little nuances to really um
Get a
leverage
good
who not
result.
how.
Yeah. I think,
So
and I'll just put an exclamation point on it and just say like the confidence, you need the confidence to push, right? And the
yep,
confidence only comes from doing, from going through these problems in the past and seeing them coming up in the future, and then pushing hard to not allow them to come to fruition. Like that is it. Like I can push so hard and almost like make
yeah,
people uncomfortable on the accountability side because I'm like, I've been here before, guys. I don't want to face this problem. Let's just take care of it now. So.
yeah,
Yeah, that you need the confidence to push. So it comes from doing.
yep.
Yeah.
Um, okay. What
I
else you got on your list for
I got one,
pearls?
one last thing on so this is the time of year you and I were talking before the show just about like systems and process and like compliance stuff that's so boring. Like this is tax time. And so I'm getting all my K1s organized from all our partnerships. I mean, I'm talking about like 15 to 20 K1s, right? It's ridiculous. And on
Yes.
top of that, I have to pay PTE payments for certain states where properties are, right? Like I have either a refund or a payment to make in for certain properties. I have property tax, like it's just a mess of, I shouldn't say a mess,
Yep.
but it's you need once you grow to a certain point, you really need structure to organize it, or it makes your brain go
Yep.
crazy. So, but
Yep.
I've needed a few years of going through it to realize that like I don't want this next tax season. So this is the system I'm going to build now so that I'm on top of it. And I'll even if
Yep.
I don't understand something, I call my CPA and say, tell me like I don't want to think about this again. So tell me exactly what this is going to look like next year and the year after and the year after. And then I'm also
Oh
like
man.
building a system with my CPA who really appreciates it because they like really organized clients as well. So
Yep.
that's just a little tip there. But a fun thing is, so I got like all my depreciation in for the year this year for everything. I think I'm gonna have like $2.5 to $3 million of depreciation this year off of all my
Nice,
real
dude.
estate.
That's
So
awesome.
yeah, so
That's so nice. And so, yeah, and then any extra you just be able to carry forward, right? Like a piggy bank.
Mhm.
So that's pretty sweet, man. Peace of
Yeah.
mind in April 3rd, yeah, beginning of Q2, right? You're not waiting until like Q3 or Q4 to figure that out with all the stress. So that's really good that you're doing that. That's a great habit. Not
Yeah.
surprising. You're always on top of things. Good job.
Try to be. What do you got?
Yeah, so I think last time I mentioned it a little bit, but the banking system I got going on now, we're using Fidelity Cash Management for all like my personal war chest, I think is great. So the war chest is where I send money, receive money on a personal, like not a business LLC. It's like my personal account. So like contributions of capital, short-term loans, like everything just comes back to there.
Hmm.
It's working well. I can quickly wire money out. I don't have to like call the bank or whatever. I earn like 3% or something on my money. It's just sitting there.
Yeah.
So having the combo of those two, the percentage, but even more the wiring. Just failed to do it super quick. It's working great. And then still using Meow for all my business accounts. It's so easy. I can set them up for LLCs, wire money, transfer money, like lickety split, no fees. I mean, both of these two, that combo, I highly recommend. The other thing that's interesting, feedback loop. So, you know, I always talk about the flywheel, and if you haven't read Good to Great, you got to read it. But the flywheel is this is one of the common themes I need people to really understand about success in life because most people fail because they quit too early. So picture like a 3,000 pound wheel or gear, like heavy iron or stone, just sitting on its side, and then a fulcrum in the middle, like something it's spinning on. Okay,
Hmm.
due to the weight even though it's spinning, I mean, it's got like one little focal point in the middle, just due to the weight, 300 pounds, it is going to be super hard to get that thing spinning. I mean, you got to grab the edge, push with your legs so hard. And I don't know if you've ever seen Conan the Barbarian. That was actually the intro scene to Conan the Barbarian. I don't know if you've
Yeah.
seen it, but it's wood.
Yeah.
It's
I know the
not
reference.
yeah. So you're pushing so hard just to get this thing started, right? And that's every business you ever go, right? You feel like you're doing all this work, but like nothing's moving. Okay.
Hmm.
And then once you get things spinning, it's easier to get it spinning faster because you've already kind of overcome that initial inertia. And then, a few years down the road, you can actually take your hands off that wheel. And because it's 3,000 pounds, it'll spin on its own for a while, right?
Hmm.
So I always think of every business endeavor I do like that. Like no matter what, it's going to be super hard in the beginning. But once you get it spinning, now you're kind of ahead of everybody else and you've gone over that hump. The obstacle is the way. So this week, here are some of the feedback loops on some of the things I started. So, as I said, a little over 2 years ago, I sold a majority shares in my dental and really focused. I just started focusing on just real estate and the capital piece as well with the fund, right? So on the real estate piece, last year, as I mentioned, I decided to commit to learning how to work with the city and the state and do community impact, income restricted housing projects, right? And I was like, hey, this feels good to do in my community. These sites that I want to do them on are super cool, but rents are never going to be high enough to validate the construction project. So I have to get city funds. And the city and the state want affordable housing. They want workforce housing, right? So we're in alignment, me and the city and the state. So it's like, okay, great. Well, how do I do this, right? So you got to talk to like 1,000 people and fill out like 1,000 applications. So that's all the inertia at the beginning, right? A year later, I am talking to the city on the phone yesterday, and we're chatting about the next project. And they're like, I just want to tell you, like, you are and your partner on these on the putting this together are like so wonderful to work with. Like, we really appreciate working with you too. And your project is so like what we want. This is the one with 42 apartments for rent and 12 townhomes for sale. And they're like in infill, like an important part that the city cares about, that we send this to everybody now when they ask. Right. And so to me, I'm like, I've only been doing this year. We're not 5 years in, right? Like our expertise will continue to grow over time. But to quickly go from I have no idea what I'm doing to hey, you guys are kind of like our poster model, right? For what we'd like to see more of here in our city. It's just nice feedback. So all of you listening, you're starting a new business, like find a vision you believe in, right? Build alignment and then keep at it. Um, Another one is I had one, two, three people reach out to me about doing housing projects. Okay. And these are three like well-established, like go-tos in the city. And I've been doing this 2 years, right? And all three of them said, like, hey, like your expertise, your knowledge, like this is kind of like one of them just emailed me yesterday. He's like, it's a developer, it's a contractor, like large construction company, and they're like, hey, this is a little over our head. This is in your wheelhouse. Do you want to do this project? So when you're getting testimonials from people who've been doing things for a lot longer than you, right?
Hmm.
And you're getting testimonials, it just gives you that. mm, When at the
Validation
beginning, yeah, the
and
validation. When you're
confidence.
starting at the beginning, you're
Yeah,
like, you get no validation. You get
for
no
sure.
positive feedback. You're just, all you
Yeah.
see is work with no results, right? And to have it quickly go, anyways, the funny part is I got kind of referred three projects within a like 2 to 3 block radius. Right? Within like 2 months, right? Or a month. So now it's like so one is like the flywheel spins, right? And now you're getting the feedback. But then as you grow, you have there's always a next challenge, right? And oftentimes taxes is one of the big challenges that comes up once you start spinning well. But another one is stakeholder um, integrity. So if you're working with three different groups building within 2 blocks of each other, right? There now you have other challenges like information sharing,
Hmm.
right? Like what's the high integrity way to information share here? You you don't want
Is
people to
there
feel
some
like they're caught
there?
blind because they thought they were building this building and then two more are getting built within a block of the first building, right? You don't want people walking into that knowledge when you could have helped them and let them know ahead of time. The other thing are competitive advantages, right? Let's say this project's doing this, which is a super cool idea. This one's not. How do you help the one project
Conflict of interest, right? I
conflict
mean,
of
that's
interest?
yeah,
So as all three of these projects have kind of been brought to me, now I got to go through like a list of questions, right? To make sure like I'm working with highest integrity, conflict of interest. Thank goodness for AI, so I don't have to like self like go through
yeah.
this stuff, right? I can also like ping back and forth with AI. But I think anyways, it's just
Per,
some project
per,
pearls that I took home this
so
week.
just quick, provide a little clarity. So what would your role be the same in each project? What would they be wanting out of you?
A little different in each project, actually.
Okay.
Um, three different levels of commitment. One's like the highest level. Basically, I'd be running everything. The second one is I'm equal running. And the third one would be I don't have to commit on things. I'm more helping out, right?
Support.
Support
Support.
if they
Okay.
need it. But just kind of helping, right? Hey, have you guys thought about this? Hey, do
Yeah.
this. So,
Yeah,
yeah.
I think you can see this example of flywheel in like many aspects of your life too, right? Whether it's your dental practice at first, how long that took to get going, and then once you did, everything else started getting a little easier. You could find employees easier, better quality employees easier. Your new patient flow was increasing. Your everything just got more and more efficient as that thing spun and spun and spun. And now you can be like, well, how much? This is where everyone gets. A lot of people get to is like, okay, well, how much effort do I want to keep spinning this thing faster and faster? Am I good just taking my hands off and letting it spin as it is?
Yeah.
And then you
Yeah.
go to the next flywheel, which maybe is real estate or whatever it is, and you start spinning that one. But I think, like you said, it's you recognize that that is the pattern, and it's if you know it's the pattern where you're like, man, I'm gonna have to grunt this out for a year, but then after that, it's worth it because I got another flywheel spinning. That's like the satisfaction. It's the builder mindset that is fun. And it makes you kind of want to keep doing it. Just so long
Makes you
as,
want to keep doing it.
yeah, yeah. Just so long as
Yeah.
that flywheel doesn't start slowing down too much and you have to recreate the inertia again. You'll have to do some of that, but you don't want
There's
it to
always
grind
that.
to a halt.
No, you don't.
Yeah.
Um, so yeah, don't give. I think the main lesson there, folks, is don't give up, right? Year
Mhm.
one, year two, just, it's nice when you get those feedback things, but don't give up. Keep at it and things will, as long as you're just outperforming others, right? You're just doing a little bit better on multiple areas than the average. Eventually you will
You'll get noticed.
succeed.
Yep.
You'll succeed and people will okay, I think that's it for me. Anything else, Reed?
I think we're good.
Okay, thanks for tuning in, everyone. I hope you hope that helped you kind of make your decisions with your investments, with your time. Appreciate you tuning in. Feel free to reach out anytime or join our Dental Real Estate Partners Facebook group to interact directly. Have a good day.
Thanks for joining us today. If you want to connect with us directly and keep the conversation going, join our private Facebook group. We'd love to have you in the discussion. If you want to see or listen to any of our other shows, you can find them on our YouTube channel by searching Dental Real Estate Partners. Or if you prefer to listen in podcast format, look for us on your favorite podcast app or streaming platform.
Content from Dental Real Estate Partners is for informational purposes only and should not be considered financial, legal, or investment advice. All investments carry risk. Past performance does not guarantee future results. Always consult a qualified professional. Dental Real Estate Partners is not responsible for outcomes from actions taken based on this content.